As an options trader, it's very important to keep track of some of the very important metrics that you should be monitoring. Of course, we're talking about the Greeks such as delta, theta, gamma, vega. Maybe you also want to know about the beta of the underlying stock. And I've done videos on all of these Greeks before, but today I want to talk about one of the most important things that I think every options trader should focus on, and that is managing your overall portfolio deltas. And this is done through something called beta-weighted delta. So, learn the Greeks. Today we're talking about beta-weighted delta. So, what is beta-weighted delta? Well, to understand beta-weighted delta, you need to understand first what is beta and what is delta. And I've done videos on both beta and delta in the past. If you haven't seen those videos, go watch those videos before watching this one. I'll link to those videos in the show description. But a quick recap. The beta of a stock describes the volatility of an asset in relation to a benchmark asset. The benchmark is usually the S&P 500 index, which is SPX. So the beta of a stock tells you if the stock is more volatile than the overall market, the S&P 500, or if it's less volatile than the overall market. If a stock has a beta of 1.0, it means that it moves in sync with SPX. If it has a beta above 1.0, it means that asset tends to be more volatile than the SPX. A beta below 1.0 means that asset tends to be less volatile than the SPX. And although you can get the beta for an individual stock, many people like to keep track of their overall beta as far as the beta of their entire portfolio of stocks. So let's talk about delta. What is delta? Well, delta is a very deep discussion, and it has a lot of different use cases. It's the most important Greek actually is delta, but essentially delta is the theoretical estimate of how much an options price will change if the underlying stock moves up or down by $1, all other factors held constant. And because of the way these price changes work, you can also think of delta as a share equivalency. It can tell you that option, how it equates had you just bought some shares of stock. For example, if you have 30 long deltas, that's the share equivalency of being long 30 shares of that underlying stock. If you had 25 short deltas, that's the same as if you were short 25 shares of the underlying stock. Now, delta is by far the most important of the option Greeks, and you definitely want to monitor the delta of each of your individual option positions, but you also want to gauge what is the delta of your overall options portfolio. And this is where the problem begins. So what if we want to measure the delta of our entire portfolio? How can we do that? Well, we can't simply add up all our individual positional deltas, because these deltas, they're based on price movements within each individual underlying, right? So the deltas in one underlying do not equate to the deltas in a different underlying. They're not comparable in any way. It's truly comparing apples to oranges, or as a joke here, I said maybe comparing Apple to Microsoft, for example. And that's a perfect example. If I have some option positions in both Apple and Microsoft, I can't compare the deltas in Apple to the deltas in Microsoft. They're two very different products. For one, Microsoft is a much more volatile product than Apple. Right now, the share price of Microsoft is much more than Apple. Their deltas are in no way comparable. So how do we actually get an overall portfolio delta? Well, combining it with beta kind of solves this problem. Now remember that beta tells us how an individual stock compares to the S&P 500 index, SPX. Well, we can do something similar with deltas. We can beta weight our deltas. And what this does, it takes into account the entire portfolio's exposure to price movements in terms of one single underlying asset, which is usually SPY in this case, which is the S&P 500 ETF. So beta weighted deltas, what it does is it takes all of your options positions, all of the deltas, and it compares them to a benchmark asset, in this case SPY, and that way these beta weighted deltas do in fact compare to each other. Technically, you could beta weight your deltas to any underlying asset you want, but almost all trading platforms are going to default to using SPY, because I think that's what most traders want to measure their individual positions. They want to see how their individual positions relate to the overall market, and for the overall market, most traders are comparing it to SPY. But at least on TASTYTRADE, you could go and change the beta weighting. For example, if I go into accounts here, you can see beta weighted symbol and SPY is the default. But if I wanted to instead, beta weight to QQQ, which would be the NASDAQ 100, or I don't know, IWM, the Russell 2000, whatever I wanted to beta weight to, I could change that. But I honestly wouldn't want to do that because it could be very confusing, especially if you're one of these people that do try to manage your portfolio deltas. If you start playing with the underlying benchmark, you could mess yourself up if you constantly change that thing and you don't realize exactly what you're comparing your portfolio deltas to. So let's talk about beta weighted deltas and your individual positions. So when you look at beta weighted delta, it tells you if you're A, long the market, B, short the market, or C, delta neutral. So if you have positive beta weighted deltas, you're long that market. If you have negative beta weighted deltas, then you're short that market. And if your beta weighted delta number is hovering around 0, you're essentially delta neutral, meaning you're not really directionally biased in either direction. So for example, if you have an options position that has a beta weighted delta of 25, this means that your options position is similar to being long 25 shares, not of the underlying stock, but remember, of the benchmark asset, SPY, right? We're using SPY for our beta weighting. So if you sold a put, I don't know, on Microsoft, and it has a beta weighted delta of 50 positive beta weighted deltas, that is essentially the same as being long 50 shares of SPY. If you had a position that had a beta weighted delta of negative 35, that's similar to being short 35 shares of SPY. And because we're comparing everything to SPY, now we can actually add up all of these deltas, these beta weighted deltas, and get a portfolio delta. So when it comes to your portfolio deltas, always keep an eye on your overall portfolio beta weighted delta. If your total beta weighted delta, for example, is 250, then you know that your overall portfolio is similar right now as being long 250 shares of SPY. If your beta weighted delta is negative 120, then your overall portfolio right now is similar to you being short 120 shares of SPY. Now on the TASTYTRADE platform, you can add delta to the header. So everything in the header is all of your overall account values, your account metrics. So if you add delta to the header, that is your portfolio's overall delta. And remember, a portfolio's overall delta is beta weighted delta. That's the only way you can get it, right? So, because just regular deltas don't make any sense. You can't compare individual deltas in different stocks. So you have to beta weight deltas to get the overall portfolio delta. But when it comes to individual positions, if I back up a slide, you can actually have beta weighted deltas and you can have your regular deltas, which are just, the deltas within that individual asset, that underlying stock. So there's two different deltas you can add to your platform. If I actually move my head, you can actually see that I have beta weighted delta here in this column. And then this column here that says /ETF/delta, that is just the delta of the option positions. That's just your regular deltas, right? These are not beta weighted. So for example, this last position I have here in XHB, which is the home builders sector ETF, you can see that overall, that strangle that I sold in XHB has a delta of 0.11. So that's an 11 delta strangle. But if I wanted to beta weight it to see how that position compares if I was long or short SPY, I have the beta weighted delta column here, and you can see it's a positive 3.11. So that is essentially, that position is the same as if I was long 3 shares of SPY. So you can track your beta weighted deltas individually by position, and of course, obviously, most important, you need to track your overall portfolio beta weighted deltas. So let's talk a little bit about monitoring your overall portfolio deltas. So traders tend to gravitate to either being primarily bullish, primarily bearish, or primarily delta neutral traders, right? As wheel traders, so I use the wheel strategy primarily, I put on mostly bullish trades. And as somebody that mostly puts on bullish trades, I have to be careful because it can be dangerous if I get too long the market. In other words, if I get too many beta weighted deltas. If I'm trading with a $100,000 account and I'm looking at my overall portfolio deltas and that beta weighted delta number for my portfolio is, I don't know, 1,200, right? 1,200 long deltas. That's the same as being long 1,200 shares of SPY. Is that good or not? Well, obviously that would be extremely dangerous for that size account. I'm way too long the market. If the market had a major correction tomorrow, my account would be in a lot of trouble just based on that beta weighted delta number. So that's how you want to treat beta weighted delta. If that number seems too crazy, like just again, imagine that you're either long or short that many shares of SPY. Would you be comfortable with that based on your account size? If the answer is no, do something about those beta weighted deltas. Some of you guys are probably delta neutral traders. You guys love to trade things like strangles and iron condors, which are not directionally biased in some way, so you're playing for not really a movement in either direction. Now you guys, what you want to do is make sure your beta weighted deltas never get too long or short. You want to make sure your beta weighted deltas are somewhere reasonably wrapped around zero. It's never going to be exactly at zero, but if it really starts leaning in one direction or another, again, if you're trying to be a directional neutral trader, then again, you need to do something about those deltas. Now, naturally, you might ask, how do you get that delta number down? Say you do have too many long deltas, what should you do? Well, put on more bearish trades. I mean, that's essentially how this works. If you're too long, right, just put on more bearish trades. So put on, some, I don't know, call credit spreads or long put spreads, or you could also short some futures or some of the micro futures. You could do a lot of things that would add some short delta. So that brings your overall portfolio delta down a little bit and gets you into a much safer area. Again, if you ever get out of line. So there you have it, a quick and cursory overview of beta weighted delta. Now, I think, again, every single options trader has to monitor their overall portfolio's beta weighted delta. That number is just too important for you not to, at least once a day, check that number out. And are you comfortable being that long or short that equivalent shares of SPY? Again, if you're not, then you should do something about that number. If you want to learn more about beta weighted delta as well as the other option Greeks, check out my book, The Super Wheel Option Strategy. This book is available on Amazon. It's available in paperback, hardback, and in a Kindle edition. You'll find a link to my book in the description below. Peace, guys.